Major changes are happening with banks, and everyone will be affected. If you've touched cash in the last 30 days, you need to hear this, because banks just changed the rules quietly. And no, I'm not talking about $10,000 cash deposits either. I'm talking about $200. Yes, $200. This was a massive move that had a pilot run in 2025, and now it is 100% live. So, if that $200 number doesn't scare you yet, it will by the end of this video, because this isn't about criminals. This isn't about drug dealers. This is about you, your money, and how the system is being rewired in real time. And almost nobody is talking about this. So, the big question is, why is this different? Because for decades, the rule was simple. Big money equals attention. Small money got ignored, and now that rule is dead. Banks, payment processors, and federal agencies are no longer focused on big transactions. They're focused on patterns, small cash deposits, frequent withdrawals, low-dollar wire transfers, repeated payments under the radar. That's the new red flag. And the scariest part, you don't get notified when you're flagged either. So, let's talk about what's actually changed. At the start of this year, federal agencies quietly expanded financial monitoring guidelines tied to national security, border enforcement, and money laundering prevention. This came straight from executive-level policy shifts, not Congress debates, not headlines. So translation, banks were told, start looking closer, not just at who, not just at where, but how often and how small. Because regulators realized something huge. Criminal networks don't move money like they used to. They don't wire 50,000. They don't deposit stacks of cash. They move a 100 red, 200, even $300 over and over across multiple accounts across multiple people. So, what did regulators do? They lowered the microscope, and now normal people are caught in the same net because, let's be honest, they can never do anything. Clears throat, right? But let's talk about the data they're using, because federal data shows over $70 billion moved internationally last year through remittance alone, most of it legitimate families helping families, workers sending money home. But regulators say bad actors hide in plain sight. So instead of isolating criminals, they widen the dragnet. That's why banks are now over-complying. That's why payment apps are tightening. That's why small transactions suddenly matter. Let's talk about the remittent tax that nobody's talking about, because this is a massive, sneaky move. Here's the detail that most people missed. Lawmakers quietly approved a 1% tax on international money transfers. Originally, it was supposed to be 5% and only for non-citizens. That got backlash, of course, so they lowered it and expanded it to everyone. That tells you something. Once money is tracked, it gets taxed. Once it's taxed, it gets monitored forever. So, let's talk about how this hits normal people. First, let's be real. This doesn't hurt billionaires. This doesn't hurt politicians. It hurts cash-based workers, gig workers, immigrant families, people without strong credit, and anyone avoiding banks. And here's the ugly truth. Businesses don't want flagged cash, so they stop accepting it. Now, moving on to a really crazy part. Cash isn't banned, it's punished. Because cash isn't illegal, it's just becoming inconvenient, questioned, and expensive. Stores push cards, apps push digital wallets, banks push compliance, and if you don't fit neatly into the system, you pay more, you wait longer, and you get denied faster. Let me walk you through a scenario, because this is where people don't think far enough ahead. Let's say you work a cash-based job. Nothing illegal, tips, side work, small payments. You deposit 200, 300, 400 a few times a week. Individually, harmless. But to the algorithm, that looks like structuring behavior. And here's what people don't understand. The system does not assume innocence first. It pauses first, flags first, reviews later. And during that review, your account can be temporarily restricted, placed under enhanced due diligence, or quietly marked higher risk. No email, no phone call, no warning. You just wake up one day and your card declines. Now, let's go one step deeper, because this part is important. When an account is flagged, banks don't just look at that account. They look at linked accounts, shared addresses, payment apps, transfer history. So, if you've ever sent money to a family member, a friend, a roommate, congrats. That network gets reviewed too. This is how one flagged transaction turns into 5 affected people. Yeah. I know that sounds crazy, right? And before someone says, yeah, but that's only for criminals, No, compliance departments don't decide guilt. They decide risk tolerance. If you're inconvenient, if you cost too much to monitor, if your behavior doesn't fit their model, they exit you. I want to give a special shout out to all my beasters out there that are working hard to fix their credit using Dispute Beast, the most advanced AI credit repair software ever created that comes with a 110% money-back guarantee. But specifically to Kenneth's credit score went up 282 points after just one round with Dispute Beast. And Arthur's credit score went up 670 points after just 2 rounds with Dispute Beast. But let's not forget Destiny. Destiny's credit score went up 264 points after just one round with Dispute Beast. Dispute Beast link is going to be in the video description and pinned at the top of the comments for anyone that needs to fix their credit. Banks don't need a reason to keep you, they need a reason to drop you. Now, here's another angle nobody talks about. Also, once you're labeled high risk internally, it can affect new account approvals, credit extensions, loan reviews, payment app limits, even if you did nothing wrong. And good luck getting a straight answer because compliance decisions are non-appealable. Yes, you heard me, non-appealable. Now connect the dots. Cash is being monitored more, credit is becoming mandatory, and digital transactions are logged forever. So what happens when cash is discouraged, credit is required, and privacy disappears? You don't own your financial freedom anymore, you rent it. And this is exactly why this shift matters way more than people realize it. This isn't about stopping crime. This is about control through compliance. The fewer ways you can move money, the easier you are to manage. That's the real game. So, here's the question you need to ask yourself, and I want you to answer in the comments. Do you think cash should stay private, or do you think this level of monitoring is unavoidable? Because once this becomes normal, there's no going back. Last part's the most important, and this is where credit becomes non-optional. This is the real play. A cash-like society forces credit dependency. No credit, higher fees, limited access, and worse terms. Bad credit, higher interest, more scrutiny, less flexibility, cash used to protect people from that. Now it's being phased out without saying the quiet word out loud. And privacy is the real casualty. Every digital transaction logs time, location, frequency, recipients. The data never disappears. It becomes a profile, a score, a risk category. And once money behavior becomes a metric, it gets used. So I want you to understand this isn't about fear. This is about awareness. Cash isn't dying overnight. It's being slowly boxed out. And people who rely on it the most, they feel it first. So, do me a favor and drop a comment. Do you think cash should stay private, or is this inevitable? Let's talk about it. And if you have any collections, charge-offs, or negative items that you need to delete from your credit reports, make sure to watch this video right here because it's going to show you how AI will do all the work for you. Mail your letters, and it comes with a 110% money-back guarantee and a free credit analysis to show you what's hurting your credit and let you fix it. And if you felt that I brought you some value in this video, make sure that you don't forget and subscribe to increase your credit.